of market reaction coming through at the moment. We're bringing some of it to you. We've had Peter Maguire from CWA Global Markets with us in studio, and also we've got in the studio with us today now Jim Stening from FIG Securities. Rushed in here into the thick of it, Jim, and we appreciate you coming in as well. You're following the bond markets and you're following currencies very closely, of course. What was the best outcome for the markets today? Did we get the best outcome? A decisive victory for Julia Gillard. Rudd's stood down, no ballot, and within hours we've got a new leader.
Yeah, look, that's right. It's a very smooth transition. I suppose the perfect solution would have been a decision last night. But yeah, look, I think markets have taken this, or debt markets have taken this in their stride. So it's been a very smooth transition. I mean, I don't mean to appear flippant, but I mean, if Kevin Rudd was ill or if he was overseas, I mean, these are the people who would be in control of the economy.
And yet, Jim, they'd be in control with the knowledge that ultimately they had to hand things back. And already, I want to get your view when you talk about the impact on the bond market. People are saying maybe short term, no change, but long term, with the Prime Minister that favours more spending, that means a budget deficit that is not necessarily addressed as quickly as it might be. What do the bond markets take from that? That's
exactly the situation, Carson. I mean, obviously there are going to be changes to these, I suppose, controversial policies that were part of the budget, and obviously there's going to, I suppose, be a short period before clarity needs to be provided, but it certainly does.
Also crossing the wires, this important event taking place on the weekend, the G20 leaders meeting in Toronto. We're getting a wire now, crossing the wires, Dow Jones saying Wayne Swan will be going to that. Pete and, of course, Jim, what's the significance of G20 at a time like this for Australia? What were we looking to do? What must we do in Toronto? Jim, to you first.
Well, I mean, I think basically there's the global growth is what's on the table. I think, interestingly, what we saw last night from the comments from the FOMC were that in their economic modelling, there's some tangible evidence, or there's evidence that this situation in Europe is causing problems as far as forecasting growth is concerned. So I think we're going to see more of I suppose, a collegiate approach to solving those issues.
Because we were talking about this morning with Kathy Leon from GFT and saying, look, it's kind of this interesting split. You've got the Canadians, you've got the Australians, you've got the New Zealanders saying, let's tighten on rates. Let's actually start that process now, whereas in the UK, signs of a split almost. There was a dissenting voice for the first time overnight with the Bank of England. That's an interesting kind of split emerging, yes. But certainly more stimulus in the US is not being ruled out. I mean, where are we at now with a G20 that comes out with one line on this? Looks credible.
Well, there are so many different factors at play, because you've got the Chinese coming in there as well, and now we're talking Australia, and they're all talking about super profit taxes and what effect that's going to have on the adoption of similar taxes in certainly Chile, Brazil, and of course Canada, sure, with their resource sectors. So this puts, I think, the whole thing on ice. It'll be interesting to see what happens with Swan over there, and what transpires in the next couple of days.
And maybe a couple of years ago, people wouldn't notice so much who got sent from Australia to this kind of event. But the fact is, you've got countries like Canada and Australia with our commodity-centric economies really getting much more of the focus. And then even just the past week or so, there's been talk about the Australian dollar maybe being included in reserves of the IMF or even China.
So true. So, we really are entering the full global stage. We have arrived, 22 million people. It's quite, amazing, really. And when you look at the imports as what China has of our commodities, it's front and centre. So the whole world is very much focused on what we provide and what we export to growing economies. And it really is, it's a very delicate situation now with super profit taxes and where the world sits from a slow economy in the West to booming economies in the East.
And considering that, I guess that you're talking about uncertainty ultimately and questions, Jim from FIG Securities, Jim, do you think that you see more money going into bonds at a time like this, and maybe in the next 6 months, if we get an election September, October, is that when people just start to put money to the side, over to that safer side of the market?
I mean, they could do. I suppose that, it's not necessarily just a domestic consideration. I mean, that's certainly what we're seeing in the US. We're seeing long-term treasury yields at 15-month lows. So there is obviously demand for top quality assets.
But you don't see this local issue as something that necessarily forces people to move money?
Look, uncertainty does certainly do that. I guess you know, we've had this change just overnight. I think there needs to be some sort of clarity over the next few weeks. Otherwise, we will start to see people moving into those types of assets, I'd imagine.
We just want to take a little bit of a break away for the moment. Let's return to our panel in studio. We've got Jim Stening from FIG. We've got Peter Maguire from CWA Global Markets, and of course, you know, Carson Scott with me here in studio as well. Can we go back to you, Jim? I haven't seen anyone this morning saying that this resource super profits tax isn't expected to be watered down. Everyone's saying some sort of deal's going to be cut, whether that's some sort of deal with the mining sector or whether it's scrapped completely, we don't know. But the issue is, I guess, for all of us discussing this today, is the implications for the federal budget. If they make some sort of change and that affects revenue, well, they've either got to raise taxes or they've got to cut more spending.
That's right.
What's your thoughts on this issue?
Yeah, well, look, I mean, fiscal credibility is what it's all about at the moment, and obviously in Europe, austerity is the new black. And here, you know, we do need to make sure that we are filling that hole. So, I guess you know, we most definitely it's something that needs to be addressed in the very short term from Wayne Swan. Markets will begin to get a bit jittery about that if there's not clarity on that topic.
How much do we know about the likely dynamic of them both working together now? Because Julia Gillard often criticised for that $16 billion spend when it came to school building. People saying a lot of that was just money, good money thrown after bad. It wasn't needed in the system right now. Then again, Wayne Swan, when it ran around the country, said he was puffed up with pride seeing chippies with, you know, their yellow bibs on, you know, having cups of tea and really getting out there and breaking ground. It was jobs, 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 and that kept unemployment low. In that push and pull, what might happen? Because now already a viewer is talking about, look, dump the RSPT, Sammy says, raise the GST by 2.5% to 12.5%. Could it happen?
Well, England did it in the last 36 hours as well, and that may be the only solution. We have a very deep hole, and they've spent, and that's been the whole mantra over the last couple of years. Rudd's now fallen on his sword. It's as simple as that.
Big difference, though, that Britain's got the biggest budget deficit of the G20.
Seems a bit drastic for Australia to be raising the GST for the money we've spent.
Yeah.
Yes, when you look at overseas.
Yeah, well, certainly, but when you think about what the super tax was going to do, and we certainly have spent, we had wonderful surpluses in the Howard years, and now we haven't, they're not as large as what they were, and so we're now running, you know, close to a different mindset. And this is where Abbott, and I suppose his whole mantra is going to be over the next couple of months, and he hasn't got long if there's an election called for September, what's his ground going to be? Where's the money going to come from? And possibly it's just going to be, you know, full steam ahead debating the super profits tax.
We've got another guest joining us as well to add to our panel today. Michael McCarthy is actually joining us now from City Index. He's in our Sydney CBD studio. Michael, initial impressions of the goings-on today or the market reaction so far? What do you want to point out straight up?
Well, first of all, the initial reaction has been quite positive. At the open of the futures, we saw a reasonably strong impulse upwards, despite, you know, flat or moderately negative leads overseas. Talking to the other traders at Sydney Index and to traders around the market, it's quite clear there's a lot of speculation about changes to any resources super profit tax, and that's resulting in some strong moves from the mining group this morning. So overall, I think this is being seen as mildly positive for markets.
So are you sensing people are worried about the uncertainty, or I mean, we've been discussing here as well, there's a leadership change, it's not a party change,